Guys, we got our S&P record high, and you got the 10-year below 164. Wow. I think we're going to Bob Pisani. Hey, Bob.
Yeah, morning, guys. You're right. S&P new high, and a lot of sectors in the S&P 500 new highs. Very euphoric mood on the street right now, and for, frankly, very good reason. Take a look at the sectors right now. There's a new high in the tech sector, and broad participation. Healthcare doing okay. REITs, whenever you get tech, healthcare, REITs, all leading. That's a pretty broad group there. Industrials flattish, banks, very typical going into earnings season. You see a little bit of weakness in a few days before bank stocks here. If you take a look at what's moving markets right now, you got to admit, if you look at the sentiment indicators, they're pretty euphoric here. So it looks like the tax hike fears have diminished. We're not going to get a 28% tax situation for corporations. Maybe it'll be 24 or 25%, but it's not going to be 28. Manchin's against getting rid of the filibuster. So tax fears that have been around for months now are diminishing a little. There's obviously going to be something, but it's not going to be anywhere near the worst case scenario. As for earnings, we're expecting a lot more guidance, not we don't have visibility. People are expecting CEOs to give some indication of what's going on. And investor sentiment is euphoric. How euphoric? Here's the AAII weekly sentiment indicators. 56% are bullish. That's the highest since January 2018. And this is the old school retail investors, not necessarily the Reddit crowd. Old school retail investors are really optimistic right now, really bullish and not very bearish overall here. Most S&P sectors are near new highs. We've been saying this for a long, long time. The key point here is the S&P, financials, tech, NASDAQ 100 is 1% away, and so are transports here. What's not is there's pockets that have not rallied big, and for very good reasons. One of them is those thematic tech ETFs. Everybody loves solar. Everyone loves clean energy. Everyone loves those ARK funds. But look how far they are off from 52-week highs. What they have in common, big moves up in interest rates in mid-February really hurt these stocks because higher rates reduced the present value of the future cash flows for these companies. So they've been struggling to sort of come back. If you take a look at some of the high-growth companies that are in these ETFs here, they have very common characteristics, too. Again, they all peaked, the Teladocs, Zillows, Rokus, Teslas, in mid-February as interest rates started moving up. And most of them were very much associated with Cathie Woods and her 4 or 5 funds that she's had. So keep an eye on the interest rate situation. While they've been flattish in the last few weeks, there already has been some significant damage to this high growth sector of the markets. But overall, right in the middle at the S&P 500, record highs there.
Shepard Smith here. Thanks for watching CNBC on YouTube.